Summer is less than 1 month away, and I want to provide you with 3 stocks that I feel will benefit greatly from people getting out there during the summertime and spending their money. So before I get started on this fun video, be sure to subscribe to my channel so you don't miss an episode, and let's get right into it. So summertime. Now this is a time, like I said, people get out of the house, they go do things, and I want to provide you with the 3 companies that I feel people will flock most to or buy more of their products during the summer months. And you can benefit by buying right now before all that hits. So for stock number 1, we're going to jump right into it. I think that is Coca-Cola. Now for Coca-Cola, to me, this is a company where the traffic and amount of people will increase drastically in places where it's sold, such as restaurants and movie theaters. Now a lot of companies put out their blockbuster hits during the summertime, so I think people will be flocking to the movie theaters and buying Coca-Cola. And restaurants are just more sought after during the summer months. People want to get out and they want to, go sit on patios at restaurants and have a good time with their friends and family. So I think that's where Coca-Cola will be bought as well. Not only that, but there's other summertime events that'll happen where people will go buy Coca-Cola from the grocery store more often and take them to things such as picnics, camping, or parties. Now I don't know about you, but any birthday party I've ever been to, Coca-Cola was one of the options. That's just a staple that people bring. So that's another reason that I think Coca-Cola is going to benefit massively this summer. Now, if we get into some of their financials and stock valuations, let's look at their stock chart. We will see here that Coca-Cola over the last year has grown 17%. Now, a lot of stocks have been down, but this is a consumer staple stock, so it's more defensive and it's more stable. And so that's why I think it's a great addition to anyone's portfolio looking for a consumer staple stock. If we look at their dividend, the good is that their dividend is pretty strong. Their yield is at 2.72%, but their payout ratio is a little high for my taste at 74%. I like to see that under 50%, but the growth of their dividend is higher than the market, so that's a great sign as well. That shows their strength. Now, mind you, their PE ratio is at a 27, so it's a little expensive, but I think you're paying for an iconic brand that is growing, which we're going to talk about here in a minute. So let's look at their financials. Let's look at their debt. Their debt to assets is 71%, so it's a little high, but that could be them really spending that money on expanding, and I think that's just what they're doing. Now, their profit margins are great. It's at a 64%. So for every $1 of sales, they're going to be making 64 cents of profit. So that's a pretty healthy profit margin. So good on Coca-Cola for that. Now they've had negative cash flow. Again, that's just more money going out than coming in, and that can be due to them paying big expenses for maybe expanding or things like that. So that's not a red flag for me at all. I think it's just this company growing. So if we, kind of look at their revenue, kind of their growth, it's kind of been not as a good steady growth, but it's been an up and a down, and now it's back up on an uptrend. And I think it'll continue on an uptrend for quite some time for a few reasons. One of those reasons, and one of the reasons why I picked Coca-Cola, is I feel their management is making great decisions right now to diversify and grow this company in areas where there is that growth. So for example, they decided to get rid of Honest Tea. Honest Tea was a product that they owned, and now they're getting rid of it. And I think that that's a great thing because tea isn't sought after like coffee or sports drinks or energy drinks or sodas. It's just not. Tea is still popular, but it's not as popular in my opinion as those other things. So I think that was smart of Coca-Cola just to get rid of it, because in its place, they did buy Body Armor, which is an energy drink, and they said that they want this to be bigger than Gatorade. They want to outpace Gatorade and make it the most #1 market share out of any energy drink, sports drink out there. And I will tell you, I see Body Armor are at all stores now, and a lot of people I know are buying that instead of Gatorade now. So they made a great move there. Not only that, they have unique things such as this zero sugar bite. So this is something that's geared more towards the gaming industry, and it says here, inspired by gaming. Coca-Cola Zero Sugar Bite invites you to explore what pixels might taste like. I don't know, this is just something that it's probably not going to be around forever or be the biggest hit, but if they're doing things like this, that's good. They're getting creative. They're finding ways to get into areas like gaming that are expanding and maybe making a quick profit off of it. So overall, Coca-Cola is moving towards healthier products, and that's what the whole consumer trend is moving towards anyways. And they needed to do that because they're known for high sugar drinks. So now they're going towards the low sugar, low calorie drinks, and that's fantastic. Now, as far as Pepsi, this is a big contender with Coca-Cola. People either buy Pepsi stock or Coca-Cola stock. Some buy a mixture of both. But for me, Pepsi is pretty diverse right now, right? They have their drinks, they have their snacks, and more, where Coca-Cola doesn't have that. So I feel they can expand into that if they wanted to and start to take market share like they are with body armor. So that's something to keep in mind. Just because a company is big like Coca-Cola and very well established and old in terms of how long they've been around, doesn't mean they can't keep growing. That's a misconception that I think people, it's a trap. They think, oh, this company's big, it's been around forever, they can't possibly grow. Not the truth. Coca-Cola has that iconic brand to work off of. They make a lot of money, they have good margins, profit margins, and they have a lot of smart people working for them. So I don't think it's ever a good thing to underestimate, these older companies, because I still think that there's always opportunities to reinvent yourself. So I think Coca-Cola has that opportunity in front of them, and they're starting to do that. So for Coca-Cola, I feel it's a buy when the stock gets under 60. Right now it's about 64. So when it gets under 60, I think that's the time to buy this stock and hold it for the long term. I think this is a brand that will be around for the rest of my life. So moving on to stock number 2. Now, this stock is Home Depot. Now, obviously, summertime, a lot of people are going to be doing house and yard work, renovations, upgrades. And so I feel with Home Depot, this is just where they're going to make a lot of their money. In fact, looking at their history, they post the biggest revenue numbers during their second quarter and third quarter, and we're in the second quarter right now. So with Home Depot, if we look at their stock chart, over the last year, it's kind of flat. It's down 3% right now. It kind of went up pretty heavily, of course, with the housing market, got really strong, and now it's showing some weakness. Home Depot went down pretty decent, and over the last year, it's in the red. So with Home Depot, they also pay a good dividend. Home Depot pays a dividend yield of 2.46%, and I like their payout ratio. It's at 48%, just under my 50% threshold where I'm a happy investor, a happy person to see something like that. And they also are growing their dividend faster than the market median. And so with their PE ratio, it is at a 19.22 right now. If we continue on and look at their financials, we will see that Home Depot, their debt to assets is unfavorable, shall we say. It's at 102.2%, so they have more debt than assets. But this is a company that is spending money to expand, to innovate, and to grow. So I don't see that at this point as a negative. Now, if Home Depot wasn't growing, which we'll look at here in a minute, then I'd be worried. But if we look at their profit margin, of course, Coca-Cola is at 64. They're less. They're at a 33.78. So for every dollar of sales, they make almost 34 cents of profit. And they made a positive cash flow of $509 million. If we look at their revenue, their sales growth, this is where I'm okay with that high debt, because they are growing fast, which is probably reflected based on their debt. They're probably, putting a lot of investment in their own company, and that is showing growth. So that is a great sign. Now, why I like Home Depot so much, for a unique reason, is their e-commerce. If we look at the leading retail e-commerce companies in the United States as of just October 2021, Home Depot is in 5th place. It's even ahead of Target and Best Buy and Costco, and it trails behind Apple, eBay, Walmart, and of course Amazon's a big one, but they are in the top 5. That is fantastic. And if we compare them to Lowe's, we will see that they are far above. They're in the blue section, so they take up the online spend of over 50% in the home improvement market, and then Lowe's is much less, and then all the other ones are small parts. So Home Depot shines in the online sales, the e-commerce side of things, and they do have a good app. I've used it before to buy some things, and it's It's very easy to use. They have a very good thing going, and they need to keep utilizing that. And I feel since they are on top, they most likely will stay on top, and so that's just giving them more opportunity for revenue. So even though, let's talk about the housing market. The housing market could slow down. We could see some pain there. But don't forget that we had a flood of new homeowners come in 2020 and 2021, and you betcha they're going to be doing projects this summer on their house and their yard. So I think that this is something that is going to benefit Home Depot, and even if the housing market goes negative for any reason, there's still plenty of new people, homeowners, that are going to be putting money into their homes and yard this summer. So I think for Home Depot, it's a buy under $300. It's right above right now, so it could dip below that. But that's what I think for a long-term hold is the buy-in price. Now, the last stock, which I think is a little more controversial, but one that I still am bullish on for the summertime, is Disney. Now, to me, Disney is the main summer attraction. It has movies, it has theme parks, and it's just, it's such a well-known brand. It's kind of iconic like Coca-Cola. And so if we look at their stock price, Disney has had a rough year. Over the last year, they're down almost 40%. Of course, the lockdowns with COVID did not help. They're in some controversy now with Florida and, some other things, which I don't want to get into that stuff like politics and stuff. But I really do feel that all that will pass pretty quickly, and Disney will be back to its prime, especially after these summer months of people spending big on their movies and theme parks. So they don't pay a dividend, so I have nothing to show there. Their PE ratio is at a 71, which is really high, but that can turn quickly, keep in mind, if their growth starts going up pretty massively. So even though their PE ratio is high, in the long term, this could be a great buying opportunity because with their declining growth and revenue, that PE ratio is going to grow, but if it turns around, that will shrink pretty quick, I feel. But if we look at their financials, Disney has good debt to assets, actually. It surprised me. It's at 48.6%. They have a better profit margin than Home Depot, but of course not close to Coca-Cola, but it's at 37.87. So for every dollar sells, they're making 37 cents. They did have a pretty big net cash flow of $2.5 billion, which is, I believe, why the stock price is suffering. But I think Disney will be fine. Such an iconic brand. If we look at their revenue, it is on a good, healthy growth track since 2010. Yes, it took a hit in 2020, but since then it's been growing. And the last quarter it did dip some, but I think with the summer months coming up, we're gonna see a continued trend of growing over time. That's just simply put. So with Disney, why do I like it? Well, it's more than just a streaming company like Netflix. They have top film production companies that produce blockbusters for theaters such as Marvel, Lucasfilms, and Pixar, and they all release their big blockbusters in the summertime, just like most other movie producing companies. They also sell merchandise. I mean, kids love Disney and they're gonna buy Disney products, so that's a huge part, and theme parks are highly sought after. I see on Facebook all the time people going to Disney. So I think the headwinds that are right now in front of us with Disney will be short-lived. That's my opinion. People have such a quick, things jump so quickly, right? Headlines, people's attention span are pretty short, so I think those will be behind and Disney will be back on top. So I feel it's a buy under $125, which it's under right now. So I think this is something that's a great opportunity if you're looking at Disney. So with all three of these, with Coca-Cola, Home Depot, and Disney, these are three big names in their respective categories, and I think they're great long-term holds, and they're going to offer some great summertime returns. So I feel you buy now, you're going to be happy when they do report those second and third quarter earnings. So these are my summertime picks. Let me know what you think about these and what summer picks you have that are different from what I have. Or if you disagree with mine, I'm totally okay with that. Let me know and let me know why. But I really do feel these three companies, if you buy now before the summertime starts gearing up and gets going, you're gonna be a happy investor by second and third quarter earnings. So with that said, you guys have a great day. See you later.